Welcome to the Financial Performance Matters podcast. I'm your host, Dana Jensen, principal of Danisher Consulting, based in Houston, Texas. Today, my guest is friend and colleague, Alan Wong. Alan is managing director from the Houston office of Forvis. Welcome, Alan.
Good to see you today. Thank you for having me here.
It's good to have you. Before we get started, we want to say thank you to our men and women in arms, especially the families of those who've lost loved ones in the fight for freedom. Alan, inflation has been top of mind for most business owners for some time now. Because inflation brings higher input costs, careful review of pricing assumptions has been a needful exercise for most businesses in America. How can a business owner ensure current pricing is not above the competition or possibly out of the market?
Well, this is a good question. It's it's always a tough one because you don't want to overprice, but you don't want to underprice. Honestly, I think this depends on your knowledge for your business and also the relationship with your client and prospect. I'm not surprised if you ask them, they might really willing to share the information with you, like the range of services they're going to buy or how much they're going to make or how they do it. Because in the last couple of months, I actually asked a question. I get the feedback saying, hey, this is how much I'm paying for this. This is how much I'm going to buy from it. But you need to be careful about it because if somebody paying $10 and you want to bid it for $9 and end up you costing you $20 to do it, it's not make sense to you. So I think everyone need to go back and look at their business core area and focus on those, making good return, how to stay competitive among others, invest more in technology, IT, hire and retain good people because that help you to stay on top of that. Just don't focus on the pricing itself. You need to be the one able to do the best among the others.
All right, that's good input. Thanks, Alan. The U.S. Federal Reserve has taken initial steps to slow economic activity in a number of ways, including higher interest rates. Even this morning, the Fed reiterated its intent to continue rate hikes. These actions are already having an impact on lumber prices. However, it may take some time for input prices to show up in finished goods. If a business owner's sales begin to taper off, how can a business owner tell whether slack demand is coming from a general slowdown in economic activity or whether the slack reflects a reduction in his market share?
Yeah, good comment. I think in a general mindset, when inflation going up, energy price going up, and labor cost increases, generally people cut back their non-essential purchases. So I guess it's fair to say everybody expect like a slowdown a little bit. But again, I think the idea is like you need to focus more on your core business and how to increase your market share. I mean, even slow down a little bit doesn't mean you cannot gain on market shares, make it balance out. Again, the relationship and also to understand the whole environment, like I mentioned a little bit earlier with you before that, is we are aware some accounting firm saying, hey, I don't do that kind of standalone audit anymore because we don't make good money on that one. But when I look at my firm, we know how to do it. We do a good job. We've been doing it pretty well. And actually, we gained a couple more clients because people step away from those, and actually, we're doing a good job over there. So when the market slow down, when people are saying, I only focus on my core business, maybe that is a good opportunity for people saying, hey, I can do this. I probably can make good money during this time of period as well. So to us, it's a good opportunity to us to when people step away from something and then we gain more market share or something else.
Gotcha. Well, that's good feedback. With all this economic uncertainty, trying to chart a profitable course for the weeks and months ahead can be more than troublesome, especially for smaller businesses. For those who don't have an in-house financial manager, how can business owners best use a professional services firm to help fill the gap and make smart business decisions?
That is really, we heard that most of the time, and most of our advice is like, they have a lot of stuff going on in every single business. But when people focus on what they do the best, they might want to talk with other consulting firm, professional firms, saying how they outsource something non-essential process like payroll or processing to those people, and then your best employee can focus on the core business. Mm-hmm. And then I think this is the time you need to talk to some financial advisor or accountant or consulting firm saying, hey, we want to do some tax planning for next few years. We want to do some succession planning, how we pass that along to my next generation. And so I think this is important right now to think ahead for the next 5 years or short-term or long-term, depends on the business plan. But this is something we need to look at right now.
Okay, good input. We're going to take a break. We'll be right back.
At Danisher Consulting, we focus on the financial metrics of your business. We serve small and mid-sized companies, and we've been doing this for 25 years. Our primary focus is in helping you make money. I guarantee you that if we can look at your financial statements and get to know your business model, we can find ways to help you drop money to the bottom line, put more money on the top line, or increase your profit margin. All that's a big win for you. We'll help you get to that first million.
Our guest today is Alan Wong with BKD. Alan, regardless of the economy, cost of capital has changed. From the looks of things, the cost of money will be higher for the foreseeable future. Higher borrowing costs affects some businesses more than others, but working capital remains paramount to succeeding in every business and every business cycle. With the cost of money rising, what are some of the best strategies for financing business in the weeks and months ahead?
Well, I think business owners need to understand that the capital structure they have, like the mix of equity share, the mix of the note payable, the loan, and which one it will be very sensitive to the interest rate and which one they need to pay off now. They also need to think about, certain type of loan they have, financial covenant they have to meet. If they foresee like 2022 or maybe in the near future, they may not able to meet that, or even like the adoption of a new accounting standard, like the leases, that might change some financial line items. They really need to talk to the financial institution or bankers, say, hey, see how they help them ahead, because this is a big deal. Don't wait until like the year end when you need to prepare a financial statement, saying, oh, we don't meet the ratio and we may not able to extend the loan and so on. So I think this is a big deal for now with interest rate going up and all kind of changes.
Good point. For those businesses looking to do leverage before any possible downturn, help us understand how the changes in lease reporting will affect debt to equity ratios and their relationship with their bank. More specifically, how can a small business owner have a meaningful conversation with his or her banker about managing debt in the months ahead so that both feel like they're winning?
The lease accounting have been talking for multiple years now, will it become more effective? Effective in 2022 for non-public entities. So the one thing is like when you have capital leases before, so that you will have that fixed asset, but now the idea is like you don't have the right to use the fixed asset. So it's not that fixed asset itself, but the right to use. So that might change your classification of the asset, and also that might change the financial covenant calculation. Fortunately, most bankers, they do understand the changes because it's not one or two companies, but the whole US basically changing that. So talk to them early. They are pretty sure, based on my experience, based on my client, they do all willing to change that to make sure you're in compliance. And also talk about the changes, environment, how they prepare for it. Again, they need to plan ahead about that capital structure, think ahead. But in general, I think when inflation hit, actually it's benefit the borrower right now. So if the plan is like you want to invest in something, if you borrow money right now, and actually you get the money at now, and then you're paying off with the money in the future worth less. So the actual impact may be beneficial, but obviously it will be depends on your business model and your plan and goal.
Right. For many of our clients, we're having those conversations with the bank and with our clients so that they know that there's a financial advisor in their corner to help facilitate a favorable outcome. There's a lot of uncertainty about the coming business climate, and it may stick around for a while before we really know whether the U.S. can avoid a recession. While the possibility of an economic downturn may be months away, what advice are you providing business owners to prepare for a potential slowdown?
Yeah, I think the short answer, obviously I don't have the crystal ball in front of me to know that, but find the new revenue generation opportunities. I mean, there's always new product, new service that you can be the first one doing it, and then keep up technology, IT, help automate your process, being more effective, efficient. The next one is the most important. It's like hiring and retain good people, your best employee. They actually help your business generate better return. They know how, they've been staying with you. So not just talk about compensation, but build a relationship, connection. You will look back, people talk about COVID time. A lot of people saying, hey, I only feel 30, connected to my small percentage of people saying I feel connected with my businesses, my owners. So try to create that connection, try to be more than just employee. That will help you to retain the good people and prepare for this economic downturn in the future.
Interesting. Yeah, I'm glad you brought that up because I think retaining good people heading into an economic downturn, if we have one, is super important for small business owners in particular. Well, that's it for our show today. Special thanks for Alan Wong and BKD for appearing on our show today. At Danisher Consulting, we know one of the best ways to create wealth in America comes from owning your own business. We work with closely held companies like yours to drive financial performance in your business, to create wealth for you and your family. Whether your first million or your next million, we can help you get there sooner because financial performance matters. I'm your host, Dana Jensen. Thanks for joining us, and we'll see you on the next episode of Financial Performance Matters podcast. Special thanks to Alan Wong and Forvis for appearing on our show today. At Danisher Consulting, we know one of the best ways to create wealth in America comes from owning your own business. We work with closely held companies like yours to drive financial performance in your business to create wealth for you and your family. Whether your first million or your next million, we can help you get there sooner because financial performance matters. I'm your host, Dana Jensen. Thanks for joining us, and we'll see you next time because financial performance matters.